The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. This is the Thursday, the 5th of December edition of Tiger Technicians Hour. We're looking at the Dow up 30. It just missed going to the, 45,059, missed by 16, 17 points, going to an all-time high of 45,073 made yesterday. So far, this is a leg C. We need a leg D to kind of start to assess to see whether or not this is going to continue higher or whether this is going to have a turn down. Daily charts is getting very overboard. Well, the others are well, but I'm looking at the daily charts. Just before I go anywhere else, since I want this to be the whole show, here's a question. I've got a pair of sneakers that I'm looking at right here. They're not mine. They're the ones that I saw in a store in Manhattan with my grandson. We were just walking around. We went into this place. What's the most you'd pay for a pair of sneakers? I think of them. You can think of them as a kind of an investment, maybe. And I'll tell you what they are. They are Louis Vuitton Nike Air Force, Nike Air Force One Sotheby's. So, there you are, 129K. Yep, 130,000 right there. Oh, that was going to be the whole show. You just, damn, right there. Old Air Jordans, 2000. Someone said, nope, 130,000. Now, I thought I'd seen one there for 160. And I thought I took a picture of it, but it's not yet. But I would say that when I saw 16,000, I thought that is unbelievable. That's treating this as just, it's like an auction market, so it doesn't matter what it is. It could be anything, right? You pay what the market is able to bear. But when I saw them going up, and then I saw this 130,000, tulips, JB, and that's I wanted to show this just to put in place where we are, but I still don't see the kind of hysteria. Now, what's really interesting, in 1929, a lot of people are talking about the 1929 crash, relating it, but in 1929, although there was this market hysteria, there were not that many. It was a surprise to me. Two things were a huge surprise. Number one is, there were actually not that many of the general public in the market. It was an intense group, and it was expanding, but it was still a very small number of Americans. Now I think it's much broader. That's number one. Number two is, did you know that there were a lot of shorts in the market? Now I can use, thank goodness I did that, because now I can get rid of this chart, which has been on my it's in my list of things, and I'm running out of space. So I need that space. Look at this. Can I find it? Yeah, go click. That's the one. Okay, there it is. So have a look at this. Tell me when it is. Well, I've given you a clue, but I want to get rid of this chart because it's been here a long time, and it's very important, but I just need the space. All right, where is this? This is a market that went from one particular high over a period of 1 year, 2 years, 3 years, 4 years, and look what happened. Only after this huge decline did it actually, it didn't move it to the right, huh? All right, well, that's the chart I've got. Did it move up? And this is from the high of 386.10, September, the long weekend, September of 1929. Remember, I've had a whole webinar on this, where Goldman Sachs went public in 1929. Empire State Building papers were signed in the summer of 1929. Just everything that you would expect. And look what happened. It comes all the way down, and it stops at 40. 386 to 40, and then it starts the big move up. So this is a chart. I just want to say, look, charts, when you use trend line, isn't this an incredible trend line that every time it started there, right? And it could have been here. I don't want to go through it now, but I have a rule of how you can use trend lines. Don't always go to the very top turnaround or the very bottom, because it's always too sharp. Go to the next pullback and use it. Look, this trend line here would have taken it out. But if you use that trend, that was perfect. It took you all the way to the big turn down. If you use this one, you would have been taken out much. But this one here, from that right shoulder failure, dreaded H pattern, whoosh, all the way down. All right, so I can now use that space. Very nice. I can go on with the show. Let me take this chart here, the 130,000 Sotheby's chart. I wonder if it was sold. Go on. And that's from that store, I think it's TB or something. What is it called? They have all these sneakers in there for sale. Bartering, I think, is more like it. All right, I want to get out of that. I want to just take that, go click. Yeah, click. All right, I'm ready for the show. Here we go. The Dow is now down 37. So this is what I'm looking at, just on a purely technical basis. I'm not looking at or listening. I'm not doing anything. I'm only taking the chart of the daily Dow, and I think this is very important. Why? Because I think we've been seeing a buy the news situation with Trump, and there could be a sell the news going into January or at the inauguration phase. So what I'm looking at is on a very short term, you got 45,073 for the daily Dow high yesterday. Days, yeah, anything can happen between now and the close. But look how it struggled. It went from 45,071.29 on the 29th of January, 29th of November, to just 3 days it takes, and then it goes back and it goes only to 45,073. So either this is going to become a cluster formation, or one of those patterns I talk about, where I talk about the falling axe formation, when you get a little bit of a turn down and expands to the downside, and then you break to the upside. I'm just keeping it in mind that you're struggling to go all-time high, but you're struggling to really power high over the last week. The 9-period moving average is fantastic, way over the 14. So to get any kind of sell signal, it could be just a bad news thing coming up in the next few days, but it has to be sustained. You can't get a continuous down move of thousands of points and in time and price unless you get really bad news, geopolitical. Sometimes it's only very brief, but if it's economic, if it comes from the internals of the market, that's when you got to watch out. We don't have that yet. So on a purely, today I say to subscribers, we've been doing this for a couple of days, let's take some good money off, just lighten up. We've taken profits from 30, 40, 60%, 150%. Yes, we went into a position yesterday, and I'm going to explain it. I'll do it right now. So I thought, okay, because this is a period where I think we're getting excessive in certain areas, like certain tech sector areas, where would there be some benefits? So I thought, maybe. I know Trump has blasted U.S. Steel, said he's not going to allow the takeover. But yeah, there's some steel stocks, and the SLX has actually had done very nicely. It's not doing badly. So steel, but this is not a great chart, the H pattern. So that's not great. And then I thought, well, let's go to potash. This is the Mosaic company, phosphate and potash. Nope, didn't work. I said, let's get in, give it a try. Got out.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So I should go through all the different indices. Let's do that. Okay, so here we go. Dow. The Dow is trading down 44. It's still in the upper. It's an inside day so far between the high of yesterday and the low of yesterday, so that's good. No, I'm not talking 1929. A lot of people start talking about 1929. I'm only showing you a particular chart. I kept it there because I kept wanting to talk about it to say that in huge bear markets, and that was the most unusual one we've ever had because there was no backup, anything. Can you imagine? You remember the folks from the various scandals got a lot of their money back. That's never happened in history. So all I can say is that there's a really big difference here in the environment. And the questions come in. We had the .com. I've got a great question coming up in Ballard. Power from Greg. Greg, I just want to see. From Don. I'll get to it in a moment. So, yeah, listen, I lived through a number of these different things, but I'm talking about major corrections like the housing market, like .com, like the Bitcoin from, didn't even do Bitcoin. Before I forget, I meant to do it during the market update. Bitcoin right now is trading an all-time high at 104,055. So I'd said that I'm calling this, remember Chapman Wave, I have a lot of faith in my Chapman Wave methodology, peak Ds, or where other things can happen, but you target in a buy signal, upgrade to buy mode is at least 4 higher peaks. Peak A is the first, peak B is the second, peak C is the third, peak D is the fourth. Well, yesterday I said, I've got the Bitcoin futures contract, and that's really key because that trades almost 24 hours a day. I have to consider that that's very important. I've also got the Chapman Wave cup and ladle to D. I've typed it in right ages ago in this particular breakout pattern. So I have to believe that Bitcoin would go above 100,000 to that leg D in the weekly chart, even though GBTC, which is the intraday Bitcoin investment trust, had already made a D. I said, no, I'm waiting for that D. I believe that'll come. So here we are now. Bitcoin investment trust is at E. So what I said was to subscribers, we've got to take another little bit off our Bitcoin position. It's been fabulous. It could go high. It doesn't matter. Money management is what it's all about. I want you to be able to last, even though for new subscribers, we took a 4% a loss in the position, which I'm trying to attempt now to see how can we start to order our positions so that we get into a new sector. That implies that maybe the IWM moving too quickly, I think. I can do that, but it's not fair for people just listening in. So I'm going to consider that this is maybe an F in the daily chart of the Bitcoin. It could be F/C. I haven't got any signals yet to say it's anything else but moving higher for the moment. But I said, let's take something off our position. And that's kind of important because that's money management. And if I'm correct, I think we've got about I might be wrong, but I think it's about a 50% gain so far in that position. Now, what we're looking at is within the context of this being a leg E, finally I've got my BTC, which is the Bitcoin futures, in leg D. I've got leg D in the monthly chart. I've got this alternate count. I've got an F for the moment in the daily count. I'll do a little work because if the MACD, which is negative right now, actually goes back to positive, that can give you another couple of days to the upside before it can maybe turn down. So I just wanted to get to that. So next thing is I wanted to go to, isn't this interesting? Look, SPLV. This is the S&P 500 low volatility fund. Remember how it was leading the S&P by a little bit, but it was leading? It made its high before the S&P itself, 500. Well, look what's happened. It made a peak F/E. I think it's going to turn out to be an F because the two daily candles right at the all-time high. Only trouble is it could be an alternate count. It could be an F/B in the no, it couldn't even be a B. It's an F for the moment, and /A in the weekly chart, and a C. There's no other way I can count it. It's a C in the monthly, and D is the objective, right? That's the reason why I'm saying we should still see some higher highs in 2025, but I think we got to be a little careful now. I'll go back. There's no rush. I'll talk about it over the next week. And look at the what is it? It's the RSP. RSP right now. RSP made a peak F. That is the equal weight, S&P 500 equal weight ETF, and a leg G/C in the weekly chart, an E in the monthly chart, and an F, as I say, a little double top right here, a two-bar reversal when the price is really close from one bar to the next, and then it starts to turn down quite sharply. So it hasn't turned down sharply yet, but that's what I'm saying. Be careful. QQQ. Index 100, leg D, all-time high as we speak. Nothing here. Look, the stochastic's flat at 95%. I'm not jumping into shorts and everything. I'm saying I'm anticipating that we're getting very close to some kind of a pullback. Could be rotational, so that some things do and some things don't. But I'm just being prepared. That's all. So that's the QQQ. Look at the SMHs failing, down almost 4 points. Had a very nice 4 days, and now looks stalling. And the semiconductors, if it's stalling, I respect that. All right. So with that said, let's go on to the IWM. So the IWM is the iShares Russell 2000 ETF. So far, I'm calling it a potential double top at 244.46 from November of 2021 down to 161, whoosh, all the way back in a much shorter period of time to the high of 244.98 in the iShares Russell 2000 ETF. And so far, it's pulled back from that, but it's the whole month we've got of December to see whether or not it can go above 244.98. You'll see if that's going to happen. Okay, so I've covered those things. Now I wanted to go through this, and this to me is really important. You've got gold down 16. Not a big deal, but look, it's just stuck. When it goes sideways and stuck like that, almost like a dreaded H, you've got to look at certain parameters. One is on the upside. In this case, the arch high, which is 2690.5 in the continuous contract from the 29th of November. If that's taken out, you can get to 2703, just kind of get into the 2700s. that's a different kettle of fish altogether. But if you break first a close below 26.40, and then you take out the low of the 26, which is at 26.29.7, that's the dreaded H. That's not a good sign at all. And so far, the weakness of the 9-period moving average being pink, not trending up, is a big problem. But look at this, it's slightly different. Silver trading at down 26 cents. If I can just refresh that, there it is. So silver had a nice move up from the low that was made right on where the 200-period exponential moving average. And what did it go to? It went to a leg at the first bar cannot be an A, because you have to make a trough before you start your wave count to the upside. So this is your first A. So now silver finally is acting a little bit better than gold. I'll be back. There's a lot to talk about. Now the Dow's at 83, S&P's down 6.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Hi folks, we're back. Basil Chapman, Tiger Conditions Hour on this Thursday, the 5th of December. We're looking at the GDX down 22 cents at 37.38. Says almost the same thing. GDX needs to get to the 39.33 area. I'd say by next week if it's really going to show strength. But if it takes out the 36.34 200-period moving average support, I'd say that that's a problem. It's a problem in the sense that the weekly chart has gone to a sell signal. I have to wait for Friday before I can put the down arrow. But if it actually pulls back under 36, that's going to become a sell mode. So you need to see, and the 9-period moving average is still green. So that's why I'm saying if next week it can flip back up into the 39s, that'll probably help that 9-period moving average. But it is a peak D already for a month, over a month in the monthly chart. All right, quickly, let's go to... I had a question about SLV. SLV is the silver ETF. I had a nice spike, peak A, peak B. Remember, you can't use that as the peak. You have to use the after the trough, you can start counting peaks. It's just a simple technique, A, B, and it's gray. I'm not going to change the color now because the stochastic's still under 80%. MACD is only now turned up, and that 9-period moving average is not even close to turning positive. No. It's rallying, but it hasn't turned positive. So it just says to me, that was probably a peak F-top at 31.80 back in October. It's going to take a lot, but that weekly chart is a lot better than the gold chart. And I haven't changed that from C. I really should, because that's the methodology I have, because you have to always look, what if this and what if that? Well, what if this is a G? That means this could be a much deeper correction. But what if it's a C? You should expect a leg D. Well, the technicals are going to help you decipher that, but you don't have to do anything in the weekly chart until the daily chart is clear, and the daily chart is still a little fuzzy. Let's go on to, I usually do Bitcoin at this point. Bitcoin is still doing very nicely. It's pulled back from the $105,325 high, that all-time high that was made. It's filled the cup and ladle. To D, I already typed that in way back when, just as it was about to break out. So very comfortable saying from D, other things can happen. But look at the technicals. They are absolutely fabulous. Stochastic at 96% in the weekly, 81% in the monthly. So that's still got some to catch up, but it's still positive. Okay, now let's just, I want to go in sequence. So now I want to go to the TLT. The TLT had a very nice turnaround. I almost said, is that a buy? But at the same time, there's so much to overcome. You see this 200-period moving average at 94.19. This is the iShares 20-year Treasury bond. Oops, I want to get this done. That resistance says the TLT needs to break into the 94.90, 95.50 kind of. It has to move up into the 95s. For me to say, oh, now yields can really come down sharply. At this point, I don't see that. I still see that this is a work in progress. We had a fulfilled buy signal to buy mode peak, a leg D, but it stopped right again at the 200-period moving average. That was the resistance back in October. Look what happened. It failed to break and hold above it. It was a little doji candle around about the 15th of October. And then it plunged. That was in the 95s. Boom, goes down to 89.42. So this is a work in progress. And this monthly chart says dreaded H to lowercase m. Watch out for that potential. And that's the surprise. And I think that yields. You've had a 40-year bull market in bonds. Surely you can have, it's only from March of 2020, this is the going into almost 4 years of some kind of a correction. But is that a major trend that we're going to go to yields down to the single digits? And then you remember my expression when I came on at TFNN 20 years ago, I said the Japanization of our bond yields. In other words, yields would go down to zero. It just sounded like a crazy expression. That was the expression for a long time. I remember talking to Tom O'Brien, saying to Tom, Tom, this is back in it was somewhere over here after the top was made at 179.70 in March of 2020 at a peak D. I said, I think we've got a trend change. I think we're going to see higher yields. So that's a change. And I don't see a change from that. I see counter trend rallies, which is what we get. Okay, enough for that. Just wanted to finish really one thing real quickly and say that crude oil, just nothing to see here. And you remember I spoke about this with Jacob the other day. I said, gee, wouldn't it be nice if the Middle East started to see some peace? Because look, Raytheon has pulled back from its 128 all-time high down to the 118s. GD, which is, there we go, GD coming up right now. General Dynamics, what happened to GD? Oh, I haven't pressed the button. GD went from a peak D in the weekly. It is a peak C in the monthly. You've got to watch that. But it went from the high of, I forgot to put that in, 315 area. It's trading at 277. And that's what I'm saying, that I think that some good things are going on here. If these defensive stocks, I bet I lost that PPA. I think that's PPA. Oh, man, I used to have this notated. This is the Invesco Aerospace. Yeah. All right, I'll read and notate this. PPA, this is the Invesco Aerospace ETF. All right, I'll get this done. But you can see it's pulling back, right? All right. Enough now. I've got a lot of things to do. So this is, I love this. So I got an email saying, had this one in the .com era, bought at 45, sold at 75, need to go to today for a restart. And what is it? And I have to chuckle because I have a friend still, who loved the battery area. This is a friend who said to me when we used to go to the auto show and saw the Prius and back in 2002 or 3, and he said, end of oil. This is it. 10 years' time, there'll be only electric cars. I said, no. It takes 50 years for any particular technology to become the norm. 50 years. He says, well, you know what? It's actually 23 years or something, 24 years, 20, whatever it is, since the Prius came on the market. And there are only 10, maybe 11% EVs out there. It takes just a long time. All right. So he bought, and for that reason, he bought this BLDR. Actually, it's not so funny. BLDR builds this. Oh, BLD. No, it wasn't BLDR. It's BLDP. Big difference. BLDP. Builds this first source. Remember, we spoke about this, saying this must be a major top at a peak D in the monthly chart. Back in March, it was up at 215 or something. It had already made a peak D, and then it pulled back sharply, 200 period moving average. Now it's trading at 194. But BLDP, and in the peak, there it is. I mean, look at that. Once upon a time in the 40s, back in 2021, so he bought it somewhere around there. Did I tell you that it went from 43 down to 1-ish? But now it's at 1.56.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019. finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. And he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Yeah, so Don, let me just get this answer out to you quickly before I get carried away again. So you're thinking that the way you had, this is BLDP, and this is Ballard Power Systems, I think it's called, back in the huge move up right there, going to the high of 2021, that you could repeat it. And I'm going to say to you, I actually think it also split at some point. I agree with you, but it's at $1.57. All it has to do is drop 35, 40 cents, and you've lost 30%. So treat it the way, I don't think I have to tell you, you've been through that whole thing before. Treat it with respect. So start a position right here because you're on long term. You're looking at this. You're looking at weeks. And I think there's no choice. Money has to go into this whole area of batteries and some form of generating the transfer of energy to your vehicle as quickly as possible. I think it's so unfair when you see these people parked and it says and you've got the parking for battery-powered cars, and they just park. They go running in as if they're not going to charge. This is great parking, and everybody else has to. So not right. Anyway, so that I'm saying start your engines, yes, and we'll get into it. And I'll put down here for Monday. Batteries. We'll just talk about it. It'll give me a chance over the weekend to review the whole thing with the batteries, etc. Okay. A question then came in. Yes, start your engines. I agree with you. I like that idea. You turn around and you say, what's the worst thing? So it goes back to $1.20. It could also go to nothing. So that's the worst thing. So don't get carried away. Treat it with respect. Part of your portfolio, small part. You could increase it as it goes higher, not as it goes lower. Now, next thing I want to just talk about is CCJ had a question. Could I show the chart? Yeah. Cameco Corporation, uranium oil, just almost off the all-time highs. Now, look at this. There's a peak D back in October from the 58 level, and it's slipped all the way to 50. That's a big percentage. But then it comes running back and makes a peak C, pulls back, and then by pennies, it makes a peak D 4 sessions ago, and that's a D, another D. I could go through hundreds of charts right now that are Ds in the dailies and weeklies. Look, weekly leg D, monthly leg E. But is that an E/A? I don't know, but it's an all-time high. Now, this D is showing no sign yet of anything other than maybe a bit of a pullback in the weekly chart. That's good. So, yes, I love it, and I spoke about this. Said uranium should be the surprise of 2024 as uranium stocks go towards their highs of the year, and particularly Kamiko should be close to all-time highs as we go into December, and that's what we're looking at. So I hope that helps you. And the key support will be in the 58 to 56 area, at least in the shorter term, all right? Now, I must emphasize, I know I spoke about different things, and I said that we're getting to an area that's overbought, et cetera, that we've been taking some profits. I'm also prepared only in the sectors that are really working. I'm now tired of going looking at sectors that might work, because the Dollar Tree, let me see, Dollar Tree, all the way down, all the Dollar Tree, let me click the right button. It's part of the sectors in the Dollar Tree area have been doing fantastically. But I looked at it and I said, okay, that monthly is just a horrible chart. Look at the weekly, terrible chart, but it's improving. Look at this daily. If you're looking at that's why I have the 3 time frames. This looks fantastic. Goes to a peak E at 76 from the 61 or so low recently. That's a really nice percentage gain. So that's the way I want to treat these things. And I thought maybe there was a chance that Moz, the Mosaic company in potash, could actually do that. I want to go to areas that have already started moving higher and are showing that in a pullback in the tech sector, these are the ones that could start just slowly to move higher. I haven't got any position in Dollar Tree. I had it on the list the other day to say, let's look at it. Don't want to do anything just yet. Question about BBAI. Here we go, BBAI. This is a very interesting company. Yep, there's that leg F. Now, this is where what happens is I call this an F, and then I go back and I say, well, the technicals were really starting to climb here, so maybe that E was an A, the F is a B, and that corresponds with that little mini A right there. So this is acting very well. So that just says I'll put the F in, but I'll also put the alternate count B. Why? I need to know what can work and what won't work. And a leg C in the monthly chart, and this is Big Bear AI Holding Company. This is what I'm talking about. It's the areas that were under the radar that very few people really are looking at, had massive moves, 16 down to pennies, down to, what is it, 58 cents. And now and then it spikes up to 6s, plunges back to the 1s, and here it is at 2.99. So the areas that we're looking at, this is in that area like Ballard Power, this is in the area of story, move up, take your profits, wait for the pullback. Story, move up, take your profits, and you can keep building your core position that way. And I think that's what Dan's done. Dan, all right, so we've got a little limited time. I wanted to do this. Things I forgot about. Atom, I was asked about yesterday, ATOM. Let's see what it's doing today. Down 15 cents. Yeah, it's just that sideways. I said, be careful. The sideways rectangle formation needs speed in which to make higher highs and higher lows. So that's gray A, gray B. Should have had 2-3 bars, and then a C. This is taking too much time. So it's just kind of stalling, but Atomera, semiconductor materials, intellectual property. So got a message again, as usual, about the dollar and about NVIDIA. Look, the dollar, I said, I think the dollar is getting to a point where it's made, but in the chart I can't, there's no other way I can count that. That is a C. But I said weeks ago, about 2.5 years, I said, that C just has all the ingredients to me that it looks like it's a D. And therefore, I'm going to be careful. We are still long. I'm not even changing that, but it's a long position from 2018 in the dollar. But I am looking at it and saying, that is a single leg A. It needs a lot more digestive phase. I think the dollar can come down a little bit more, and then we'll see if it can come back again and go to a higher high above, let's say into the 108.50 area. But it needs a timeout. Okay, did that. Next question came in. I didn't do this yesterday. I didn't have time, and I thought I'd MMYT. I looked at this ages ago. Thought, interesting name. Make My Trip Limited, MMYT, trading down $1.71. I only had time yesterday to say, look at that. It's either an E or an A. The technical suggests it could actually be an A, but let's go one step at a time, because the weekly chart And here again, alternate count, but I don't have to have it. It is a C. So far, everything's acting very well. And this is a stock that back in a year and a half ago, it was trading in the 20s. Now it's at 115 after making an all-time high. So I'm just looking at this and saying, a break is coming. That's what I'm saying. Make my trip. The trip's having a little bit of a hiatus here, and we'll do a little bit more analysis on it. And why T is a symbol. I promised I'd look there. Oh yes, CTA, yes. I'll be right back.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Let me just go back. I don't know if Donna's really poured in the buying or whatever it is, because TFNN seems to have a lot of influence in the market. That BLDP is now trading, this is the Ballard Power, is trading up about 3% from where we were discussing in just a moment. Started leggy. Don, you did a great analysis of the Chapman wave methodology. Yep, this starts a leggy. So let's just go back here. I wanted to mention the reason why I'm getting a little cautious. Look, Cintas, this is one of our key, I've got like 6 or 7 stocks that I've looked at for decades. These are very important. Cintas, uniforms, rentals, G/C in the monthly chart, leg F could be an alternate count in the weekly chart. All the technicals are still good. Look at the daily. Goes to 227.36 back in November, pulls back, And then later in November goes to 228.12, double top, pulls back. And that's the hint to say to me, now you've got to watch it closely. I put it together with, forms, everyone, all the builders. There are so many in the area. This would include the hotels, etc. And look at this. He has waste management. Nothing stops waste management from going to all-time highs. Well, it did that the other day in the 230 level. Now it's at 223, peak D. Leg D, maybe a peak D in the weekly chart, leg E in the monthly chart. I'm just saying, I'm getting a little cautious. That's all there is to it. And we'll have to deal with that. One other question was, oh, yes, the IAI. Now look at this. This is the iShares broker dealer and security ETF. Just missed double topping at an all-time high, or at least going to the all-time high from 4 sessions ago. Of 154.38. Today's high is 154.38. Today's high is 154.38. Ho, ho, ho. Anyway, these are things I'm looking at. Stay tuned for Steve Rhodes. Should be a great show. Check out my opening call tomorrow. I'm going to go through a whole bunch of stocks. So give me an email about that, Basil Chapman at TFNN.